Welcome back. Today we are going to solve three problems regarding departmental accounts. So students, kindly look at here. You are given below the trial balance of Mr. Hariwant. So we have capital as on 1/4/17/50,000. So capital will come in balance sheet. Drawings will come in balance sheet. Opening stock, there are two departments we have. The first department is radio and the second department is watch. So we have opening stock will come in trading, sales will come in trading, purchases will come in trading, salary will come in PL, publicity expenses will come in PL, rent, rate and taxes PL, commission PL, miscellaneous expenses PL, furniture and fixture is an asset, balance sheet, creditor, balance sheet, 6% Government of Indian loan, balance sheet. It's an asset. It's an investment because it's given in debit side 10,000. So when it's given in debit side, it's an asset. Therefore, it's an investment, balance sheet, debtor, balance sheet. Provision for bad debts is nothing but we call RBD, reserve for bad debts. And RBD given in the trial balance is old. So therefore 900 rupee is a RBD old that belongs to last year. Interest on government loan will come in PL account. It's an income because the amount is given in the credit side, credit all incomes and gains. So 600 will come in the credit side of PL account. Cash in hand 4,500 is an asset will come in balance sheet. Prepare departmental trading and PL account for the year ending 31/12/18 after considering the following. Stock on 31/3/18, that's called closing stock, students. Radio 30,000, watches 24,000. So they're given the closing stock of both the departments. 1,200 is to be written off from sundry debtors as bad debts. So 1,200 is a bad debts will come in PL account. And the provision for doubtful debts has to be increased thereafter to 10% on the outstanding debts. So adjustment number 2 has two entry, one bad debts, another RBD. Provision for doubtful debts can also be called as reserve for bad debts, RBD. So we have bad debts 1,200 and RBD 10%. RBD given in adjustment is new, which we discussed in the previous slide. RBD 900 given in trial balance is old. So this RBD 10% given in adjustment is new. So we have bad debts 1,200 and new RBD 10%. Outstanding expenses on 31/3/18 are, that's called due, unpaid expenses. Publicity 1,500, salary 1,200, commission 1,800, and provide depreciation at 10% on fixtures and furnitures. So all these expenses we have to be taken to PL account. Revenue items are to be allocated. Allocated means distributed in the ratio of 2:1 between radio and watch department. So all expenses are revenue only, student. There are no capital expenses in our question. So all expenses given in the PL account is revenue. Adjustment is revenue. Therefore, it's such a simple problem that all expenses have to be solved distributed in 2:1. Student, this is the trading account. To opening stock take as it is, purchases take as it is, sales take as it is, closing stock as it is, total the credit side, and you get a gross profit of 54,000, 34,000, 88,000. Let us continue the PL account, students. So students, first bring down the gross profit from the trading account. Then take interest given in the credit side 600 in the trial balance, distribute in 2:1. All expenses and incomes to be distributed in 2:1. Salary 2:1. Publicity expenses distribute in 2:1. Publicity expenses trial balance 9,000 plus outstanding 1,500. So we have two publicity expenses, one given in the trial balance and the other given in the adjustment. Both you should distribute in 2:1. Rent and rates 2:1. Commission you should distribute in 2:1. We have two commission given in the trial balance and the commission given in adjustment as outstanding. Both you distribute in 2:1. Miscellaneous expenses distribute in 2:1. Two bad debts 1,200 given in the adjustment. Add new RBD. New RBD 10%. New RBD should be added. Old RBD should be deducted. New RBD will be given in adjustment. Old RBD will be given in trial balance. Old should be deducted. New should be added. New RBD 10%. Calculate on data. Data given in the question is 16,800. So 16,800, remove the bad debts, deduct the bad debts, and then calculate RBD. That means you should take out bad debts and then only you should calculate RBD. Otherwise, RBD will be calculated on bad debts also. So out of debtor 16,800, remove the bad debts 1,200, you get 15,600. That is called good debtors. On good debtors 15,600, you should calculate at 10% RBD. We get 1,560, total 2,760, less old RBD 900, so 1,860 you should distribute in 2:1. Then depreciation on furniture value 12,300 into 10%, you get 1,230, distribute in 2:1 total, and you get a net profit of 22,340, 18,170, and the total you get 40,510. Okay students, this is the balance sheet. Take the capital, add net profit of both the departments, less drawings, outer column, then creditors. We have outstanding salary, outstanding publicity expenses, and outstanding commission given in the adjustment. Outstanding is nothing but due. Furniture less depreciation. Debtor 16,800 less two adjustment given in the adjustments. Two amounts given in the adjustment, 16,800 minus 1,200 minus 1,560. So this 1,200 is called bad debts, 1,560 is called new RBD. You should deduct only which is given in adjustment. So in adjustment number, given in adjustment number 2, we have bad debts 1,200 and new RBD 10%, which we calculated 1,560. You should deduct only which is given in adjustment. You get 14,040. Then we have investment, that 6% government of Indian bond. Then cash and closing stock. So this is the 22nd question, students, which we need to look into. From the following information, prepare departmental trading and PL account in columnar form for 6 months ending it's September 2018. So we have three department students, P, Q, and R. Stock on 1/4/18 is called opening stock. Stock on 39/18 is called closing stock. Purchases will come in trading account. Sales will come in trading account. Common for all departments. Salary will come in PL account. I repeat students, salary will come in PL account. Rent will come in PL account. Discount allowed PL account to be distributed in sales ratio. Discount earned will come in PL account to be distributed in purchase ratio. Carriage inward will come in trading account. It's a purchase expenses, so distribute in purchase ratio. Manager salary will come in general PL account because manager will manage all the departments. So it will come in general PL account. So adjustment students, interdepartmental transfer, P to Q is 4,800. So as I mentioned before, giving department credit, receiving department debit. So P to Q, P gives, Q receives. 4,800. So P credit, Q debit. P to R 1,400. P credit, R debit. Q to R 3,200. Q credit, R debit. Cost of services rendered by P to R 1,600. P credit, R debit. Other information. Departments P and Q are on the first floor occupying an equal area, and department R is in the ground floor. Students clearly mention ground floor is R, first floor is P and Q. I repeat, ground floor is occupied by R, so ground floor means R, first floor means P and Q. And P and Q occupy equal area means rent should be distributed equally. Salary of the ground floor is 1/3. Who is there in the ground floor? R. So R salary is 1/3 and remaining salary goes to first floor, that is 2/3. So ground floor salary is R 1/3. First floor salary belongs to PQ. Number of employees in the first floor is P4 and Q3. So distribute first floor salary between P and Q in 4:3. Rent of department R is 400 per month. Since the problem is 6 months ending, you should take 400 into 6. You get 2,400. So student, this is the working note we have. First purchase ratio, purchases of PQR is 35,000, 30,000 and 25,000. If you divide by 5, you get a ratio of 7:6:5. Similarly, at the bottom, we have sales ratio. Sales of PQR is 60, 50 and 40,000. The ratio will be 6:5:4. Student, listen carefully regarding this working note of salary. Total salary is 10,500 and ground floor is 1/3 given in adjustment number 2. Adjustment number 2 as well as 1, they very clearly mentioned that total salary 10,500, ground floor salary is 1/3, that means R. Who is there in the ground floor? R. Therefore, R is 1/3. So remove the R salary 3,500. So ground floor salary is 1/3. That means R salary is 1/3. 10,500 into 1/3, you get 3,500. So you get 7,000 remaining. This 7,000 is the salary of first floor. Ground floor salary 1/3, 3,500. Remaining 7,000 is the salary of first floor. Distribute first floor salary between P and Q in 4:3. Number of employees in first floor P 4 and Q 3. So 7,000 you should distribute between P and Q in 4:3. So students, total salary is 10,500. Out of that, 1/3 is R, that is 3,500. Remaining 7,000 distributed number of employees 4:3. Come back to rent, students. Total rent is 9,000. Deduct rent of R given in adjustment number 4. 400 into 6, 2,400. I repeat, 400 into 6 is 2,400. So you get remaining 6,600 that you distributed equally 3,300 and 3,300. Therefore, rent of R is 2,400, rent of P 3,300, Q also 3,300. So students, this is the solution. Take the sales as it is, closing stock as it is, opening stock purchases as it is, carriage inward to be distributed in purchase ratio. Then students, we have 4 transfers as explained in the adjustment. Receiving department will be debit and giving department will be credit. Total and you get gross profit. Bring down that gross profit. Discount received to be distributed in purchase ratio. Salary given in as we worked out in working note, take as it is. Rent also we did in working note, take as it is. Then discount allowed to be distributed in sales ratio. Then we get net profit of P 15,480, 6,450, 7,260. General PL account students by net profit of all the three departments 29,190. Manager salary 15,000. Balance carried to balance sheet 14,190. This is the last and final answer. So 23rd problem, students. The following particulars are taken from the books of Prasad stores for the year ending 31/12/18. Purchases will come in trading account. Returns outward is nothing but purchase return. Purchase return to be deducted from purchases. Sales will come in trading account. Returns inward is nothing but sales returns. So sales returns to be deducted from sales. Wages will come in trading. Stock on 1/1/18 is nothing but opening stock. Stock on 31/10/18 is nothing but closing stock. And then interdepartmental transfer, students, from department A to BC. That means A giver, B and C receiver. From department B to A and C. That means B giver, A and C receiver. From department C to A and B. That means C is a giver, A and B is a receiver. Following expenses are to be allocated equally. Insurance 6,000, 1:1:1. Office expenses distribute equally. Salary distribute equally. Rent of premises rupees 36,000 to be divided between A, B and C in the ratio of 1/4, 1/4 and 1/2. Other expenses, discount allowed 18,000 to be distributed in sales ratio. Bad debts 15,000 to be distributed in sales ratio. Legal charges and income tax to be taken to general PL account as given in adjustment number 5. Legal charges and income tax cannot be conveniently be allocated, means it cannot be conveniently distributed. So you take it to general PL account. Prepare departmental trading and PL account. So students, first you need to calculate the sales ratio. Sales less sales returns, we get 6 lakh, 12 lakh, 18 lakh. 6 ones are, 6 twos are 12, 6 threes are 18. So sales ratio is 1:2:3. Then students, kindly listen. In 22nd problem and 23rd problem, I have done two different ways of treating the transfers. In 22nd problem, transfers are directly taken to trading account. But here, I have made a working note and then I'm taking it to trading account. You see whether 22nd problem transfers are easy or 23rd working note transfers are easy. Which is easy for you, you can continue. And first what we do, we take the receiving department, all the department that received, and second all the department that issued. So issuing department will be credit, receiving department will be debit. Students, kindly go to your adjustments, the questions. We have A, department A. Department A received 5,000 and received 7,000. I repeat, department A received 5,000 from B and 7,000 from C. Department B received 10,000 from A and 9,000 from C. Department C received 20,000 from A and 10,000 from B. So these are the receipt amount of the department. So total receipt of A 12,000, total receipt of B 19,000, total receipt of C 30,000. Next, come to issuing department. That is giving department which is to be credited. Students, look at the question. A gave 10,000 and A gave 20,000. B gave 5,000 and B gave 10,000. Next, C gave 7,000 and C gave 9,000. These are the amount given by respective departments. So total issued by A 30,000, B 15,000 and C 16,000. So these amount can be directly taken to trading account. See whether this working note is easy or 20-second problem transfer was easy. See students, take sales as it is, opening stock as it is, purchases as it is, transfer debit amount, transfer credit amount. So instead of making different entries in 20-second problem, like this also you can do. Make a working note, total receipt, total issued. So that can be taken directly in trading account. Take closing stock as it is, take wages as it is, total you get gross profit. Then insurance distribute equally, office expenses equally, salary equally, rent to be distributed 1 by 4, 1 by 4, 1 by 2 as mentioned in the question. Discount allowed to be distributed in sales ratio, bad debts to be distributed in sales ratio, and then you get net profit of 3,92,500, 7,85,000 and 9,10,500. Students, general PL account, bring down the net profit of all departments, all three departments, 20,88,000. Legal charges and income tax, you should take it in general PL account because it is not able to be conveniently distributed. Balance carried to balance sheet will be 20 lakh. Students, no need to prepare balance sheet because there are no assets and liabilities. Any doubts, feel free to ask me.